What are your forecasts for housing prices at the end of 2024?
It's been a surprise, mini HELOC, HELOC boom
Rates are going up and down again.
will be welcome news for the housing industry and our financial industry. Consumers, potential borrowers should really shop around.
It made their life easy, basically. And after a short break, we are back in the studio filming another insightful episode of the A&D Digest with A&D Mortgage. I'm here today with Romy, our preferred broker with A&D Mortgage. Romy, thank you so much for finding some time to join us today for our digest. This is
My
your
pleasure.
first time right here. Thank you so much for joining us.
My pleasure. Thank you.
You've been in the mortgage industry for a while. Not surprisingly, the topic is going to be about the rates, the changes in the rates, and everything basically about the mortgages.
Sure.
So as you might seen, there are several changes in the market. Rates are going up and down again. How do you think the potential rate cut by the Federal Reserve in September will affect the mortgage market?
I think a rate cut will be welcome news both for investors and consumers because it will signal that the Feds, by lowering the discount rate, are no longer focused on the battle against protecting against inflation, but rather are now turning their attention to protecting against potential recessions. That's going to be welcome news because it's going to help the actual mortgage, residential mortgage interest rates to start and continue the downtrend that they started recently. And it's also going to signal that definitely the fears of continued and persistent inflation are going to be over. So for those two reasons, I think it's going to be welcome news for the housing industry and our financial industry. And really needed help for home buyers that are on the fence due to affordability issues because of the interest rates.
And I feel like with that rate drop, we should expect some more refis, cash outs, rate in terms.
It depends on how volatile the markets will move, and honestly, I think it'll depend on how the markets take that rate cut together with other news that usually signal fear. You know, markets respond to fear, and if there are continued fears of a possible recession, whether real or perceived, I think then the rate drops in interest rates for the consumer is going to move even faster in the downtrend. And if the rates start moving, I think down under 6% as they're starting to cross and they start to get closer to the high fives, I think at that point we're going to really start seeing refinances coming.
Right. What advice do you give to your clients to get the mortgage, to get the best mortgage terms in fluctuating rate environment?
In an environment like this, I think consumers, potential borrowers, should really shop around. And it's the reality. Here are the details of that. I recommend that they look for the right lending partner and that they find a lending professional that is truly on their side, that is fighting to get them the best rate and terms for their loans, and also that there's chemistry, that they feel comfortable. Because a real estate transaction is a complicated transaction, and there are many moving parts, especially with the financing component added to it. The consumer needs to have a financing professional on their side that is able to communicate and that they can understand each other and the details of every step and how they will be handled. I think that's very important in this market.
I definitely agree. I see a lot of cases where people just need cash, so that's why they're requesting the mortgage broker loan officer to provide them the best rates for the cash outs, to like pay off some liabilities or just to pay their bills.
The home equity, as far as residential home equity, is greatly increased. There's a lot of home equity that people would at some point be interested in converting into liquid for the reasons that you mentioned, to lower their household expenses, to consolidate debt, to pay off some credit cards that may be a burden to them. And I think that's the beauty of refinancing, being able to get them, when the rates go down, being able to get them those payments that people are going to be more comfortable and continue to help them maintain their lifestyle.
Well, yeah, I definitely agree. What are your forecasts for housing prices at the end of 2024, considering current economic trends?
Forecasting is always difficult.
Right.
But I would say, I definitely feel that the housing demand, the upward pressure in housing prices will continue, especially seeing that the interest rates are trending down. I wouldn't predict housing prices to increase tremendously as compared to last year or the year before. I think the acceleration in these price increases is really going to tame down. I don't think we're going to see, these 10% year-over-year increase in housing prices, especially, like I said, as interest rates go down and home buyers that are probably on the fence right now come to the market and start bidding on these properties, because even though inventory has improved, it's still not at the level that we needed for a balanced market.
Right. Talking about the second mortgages, how often do you get scenarios from the borrowers getting the second mortgage, the second lien?
It's recent news, but it's been a surprise. I guess we can call it a little mini HELOC boom that's been going on in the last year and a half maybe, that we've had these. Not so much HELOCs anymore, I see. Honestly, what I've been seeing lately is second mortgages using alternative income documentation, which not a lot of lenders can do.
Yeah.
Obviously, you can.
Right.
And congratulations for that, because it is a product that I think has emerged, that a lot more self-employed borrowers and borrowers that need to use alternative income documentation are taking advantage of right now.
I'm happy to share that we launched the second mortgage this year, and it's insanely popular, and loan officers are really happy that we started offering this product because borrowers basically need it.
That has also been my experience, that they don't want to touch their first mortgage.
Exactly. Exactly.
Sometimes it's even a 2-3% rate that is untouchable. So I don't fight that battle unless it's absolutely necessary. I say, look, don't touch your first mortgage.
Right.
Even if you analyze the blended rate compared to refinancing versus getting them a first loan and second loan, that blended rate is even better because that first position mortgage is really untouchable.
How do you help your clients navigate between the fixed and adjustable rate mortgages?
It's an interesting technical position, and what I like to do when borrowers are trying to decide between a fixed or a variable rate loan, how long are they looking to stay in this property, and how soon are they thinking that they would need to refinance or sell? Sometimes they can take advantage of a variable rate mortgage at this time. If they can see and agree with my estimation that maybe in 3 to 5 years, they would like to refinance and take advantage of the rates, which are truly expected to be lower than they are right now. So they can take the benefits of both worlds. They can take the benefit of a better rate now on a 3-year fixed or a 5-year fixed mortgage, and the benefit of a refinance later, and then they can convert them into a 30-year fix later on, and get an even better rate at that point.
How do you stay up to date with the latest trends and changes in the mortgage market?
That's an interesting question, because there's usually misinformation out there. What I like to do and what I like to recommend to my consumers and even my partner loan officers is that they seek professional, reputable sources of economic indicators. I like news sources coming from the GSEs like Fannie and Freddie, and even services like Equifax. They have an excellent economic presentation every few months that has a lot of great information.
I'm sure you tried the new portal that we launched successfully.
Is that?
The AIM, that's the way we call it. Any thoughts about that?
It works very smooth. You worked out all of the kinks, because my processors and I, the last couple of loans that we had the opportunity to originate through the AIM portal, we've had no hiccups that I can remember.
Beautiful.
Definitely congratulations for this.
Yeah, thank you so much. And we really enjoy hearing back from the brokers and loan officers, processors, that it made their life easy, basically. because it's pretty straightforward. You just follow the steps that they are listed already in that portal. You just follow the steps and you see the CTC status.
Exactly. And if I may add, the interaction with the portal, it's also interesting because it doesn't ask a lot of questions.
Right.
It figures out a lot of things for you. And some of the frustrations for my processors in my loan office sometimes is, but they already know this. I uploaded this. Why do I have to check this box? And stuff like that.
Have you tried the loyalty program with us?
I saw the announcement. I think it's great because many loan officers and lending partners that are already benefiting from your excellent underwriting and your excellent pricing, now they have another reason to benefit from partnering with your company. I look forward to seeing what are some of the perks. Of course, your CEO said changes to come and more news to come.
Right.
It's going to position you, if not already, I think it's going to position you at the level of a top lending partner for most brokers out there.
I really want to share that loyalty program can make the loan process way easier for the loan officer and for the processor. You can close your files smoothly with our new portal and get benefits actually from it.
It's definitely something that you're doing extra for us, and it's real. It turns better experience for our referral partners and our realtors and our consumers.
Thank you very much. Romy, that was it for today. I'm really glad that you were able to make it. Thank you very much for your time. I know it's a busy month.
My pleasure. Thank you for inviting me.
And that was another insightful episode of A&D Digest. Please like, subscribe, and stay tuned. See you on the next Digest. Thank you.